Hi everyone, welcome back to the channel. Thank you for watching this video. Today what I want to share with you is this topic about which one is more important, strategy, risk management or psychology, which one is more important. Okay, I hope that you do not tell me that it's strategy. Okay, to me, right, strategy should be the least important up between risk management and psychology. Okay, but of course most people will always start at strategy. Strategy is like, oh, how do I get into the market, right? Nothing wrong. I think most of our time, some of our time should be spent there, but most of it should be in risk management and emotion. Okay, why? Let me explain. Okay, you see, if you do proper risk management, right, your emotion will be intact. What do I mean? Okay, let's assume this trade that you put on, right, you will lose $100. How do you feel? Okay? I think most people it's okay probably, right? Because one of the reasons why people go into trading, right, is because they already set up or set aside some money. They probably have some money and they just want to make more money, right? So losing $100 a day per trade, maybe you can accept it, right? But what if I tell you that the $100, right, is 10% of your trading account, which is $1,000? How do you feel now? Maybe still okay because it's just $100, right? But it only takes about 10 trades, right, to wipe off your 1,000 trading account. How do you feel now? Riskier, right? So again, that's why risk management, right, will help your psychology, right? When you know that the $100, right, is 10% of your account, right, your psychology will be very weird, right? Because you will be very scared when you start seeing $50, $60, $70, $80, $100, right, until 10%. You will feel the emotions going high. But let's say if the $100 is within your 10,000 trading account, which is 1%, then with that you'll be like, oh, it's okay, 1%, I think it's fine. Okay, so again, this is the first part about risk that a lot of people talk about. What's the kind of risk that you are able to take, okay, and you are willing to take, right? What do I mean? Like you are able to lose $100, but you may not be willing to lose $100, right, when it is 10% of your trading account. Make sense? Right? Or you are willing to lose that $100, right, if it's just 1% of the trading account. See the comparison? Good. Okay, so the second tier, okay, the second stage of risk management that will help your psychology is knowing the fact that in reality, right, we don't make all the trades, all our trades are not perfect, right? We will never have 10 out of 10 trades winning. So let's say, what would be preferred winning ratio? Means out of your 10 trades, how many trades will you prefer to make money? Okay, most people will say 7 or 8. Let's use this example as 7, okay? So, assuming it's 7, right, what if your first 3 trades, right, are losing $100, which is 1%? Will you be able to withstand that? Will you be able to be sound in your mind, right? But comparing it to a 10% per trade, right, which is 300 on $1,000, right, how is your psychology? Not so good, right? Okay, that's my point. But to add more layer in regards to this idea, right, is what if the example is 100 trade setup. Your first 30 trades all lose money. Can you take it or not? Yeah, maybe harder. Okay, unlikely you will have like straight 30 trade losing money. Quite unlikely lah. But if you're having that problem, of course you need to seek help. Okay, but it is quite unlikely. But why I want to share this, right, is because whenever it comes to trading and investing, right, I will always want to think about the worst case scenario. Am I able to still trade my capital after 30 losing trade? Okay, I mean, if you want to make it even worse, right, you just change the 100 trades to 1,000 trade lah. Your first 300 trade losing money. Can you withhold that kind of risk or that stress? Okay, I mean that's a bit extreme, but I think we look at 100 will be okay. So do note these two factors. Okay, so the first one is the amount of risk that you are taking per trade. Okay, the smaller the percentage, better. If it's 1 to 2%, you will feel better. Okay, then second point to note that you are not going to win all the time, even at the highest winning ratio of 70%, right? You just have to know that what if your first 30% are all losing trades first? How will you be able to withhold that psychology? Will the risk management protect you from going too crazy? Okay, and again, is the third one. I just want to end it off is that when you are losing money, right, try not to double up your lot size. Okay, trade conservatively, trade safely. Right? Don't because you think that the trade can make you more money, I'm going to double down, triple down, quadruple it. Don't do that. Okay. As traders, we are not going to do that. As traders, what we are looking at, we are trying to protect our mind, or protect our emotions, and that's it. And try to get a high winning ratio. So that is what I feel a trader should be. Okay. So I hope this video helped you. If it does help you, please like and share the video, and likewise comment below and ask me more questions so that I can help you. Okay, and lastly, do turn on the notification and look out for future videos. Thank you. Bye bye.